Welcome back to Coffee Infused Crypto. Today we're gonna address the second episode from the series of the supports and resistances. The first video was released yesterday. If you haven't watched that already, I'd suggest go and watch it first. It's gonna pop up right in the right corner up. So watch that before and then proceed to this one. So yesterday we spoke about how to spot supports, resistances, and how to lay them down. For example, this is one support. Please let me note that supports and resistances can be, and you can utilize them as a zone because they are a zone. So you can portray them as zones because it's easier to combine multiple wicks together, and then at the same time it is an area where you have a wick and the bottom of a candle, so it is definitely an area. So it's easier to start with it utilizing a zone like a rectangular shape, just to identify where to expect a price reaction. So today, after discussing how to spot them and how to plot them, we want to take that into an extra level. Supports and resistances doesn't necessarily have to be horizontal, like in this way. We can utilize them to spot trends as well. Like so, diagonally, they can help me out to spot where a trend is moving and when should I expect it to react. If I want to combine a support and a resistance with a parallel channel, for example, like so. So now I have support and a resistance, and the price is moving in a channel. Always remember, the faster you spot a channel in the market, the better off you are. So a price will respect a channel, a certain channel, until it breaks. So a parallel channel would be, this one would be an ascending parallel channel since it's moving up. Usually ascending parallel channels have a higher probability of breaking to the downside. Okay, if we zoom in and grab our support and resistance, again, this was our support here. If we drag it up, and now we have a parallel channel which has a 50-50 chance of breaking to either side. If we extend this a little bit further, we notice that this one broke to the upside. It respected the top, the resistance at the top, and when it broke, it gave us this parabolic or impulse to the upside. Now if you want to know approximation of a target of any breakout, usually we take the measurement of the higher and the lower part and we project that, and it will give us an approximate target. And if you can see here, the breaking to the upside came very close to our target, exceeded our target, and then came down and respected it. So that's the technical way to measure a potential breakout from a channel. So parallel channels can be ascending, can be sideways, or as well can be descending. Any support and resistance spotted, for example this one, not perfect. Let me adjust it a little bit. So if we take it from wick high to low and expand it to the downside, let me delete this one. So here I have a descending parallel channel. So always remember, this will help us to identify, for example, if I want to trade this or this one, let's say definitely. This is on the 4-hourly. So yeah, this can be a short-term trading strategy where I put my buy positions on the support area, and every time the price moves up, would be my sell orders rejected all the way down, my buys around the lower area, I sell at the top, rinse and repeat until the breakout. When the technical break, then the price is invalid. It will move into a different formation. So parallel channels are very, very important to identify how things are moving inside a certain area, and they help us as well identify the trend of a certain asset or coin. Again, I can always expand. If you notice, usually the middle of the parallel channel, which is dotted by the orange line here, we notice that the price usually reacts around the middle as well. Okay, so this would be another example of a good parallel channel. Again, if I used the support I have here diagonally without extending a parallel channel, with the help of my support that I already have around this area, the red one, now we have a triangular formation. Those triangular formations are parallel channels, triangles, and broadening wedges. Those are the formations that you want to look for in any pattern or in any chart or in any graph. Those are the ones that we look for, your best friends, let's call them. So triangle ascending triangle formation, we will go to charts and to see how many formations we have and what are the probabilities of a breakout to each. But I'm gonna tell you the ascending one, like the one we have here, has a higher probability of breaking to the upside rather than the downside. So technically I'm expecting this to break in a certain manner to the upside, and I think we are at the verge of breaking out, retesting now on this certain asset. This is Tezos. So this has a higher potential of breaking to the upside. Why? Because the price, if you've noticed from the very bottom, was trading at a higher lows every time, higher lows, and every time it hit the top at the same price, it got rejected. So it's forming higher lows but equal highs. Okay, higher lows, equal highs, and this will help us to understand the time frame where this will break. Okay, so it will help us in two ways: understanding the time frame, because it will end around this area, right? So at the end of this area, we either need a break to the upside or a break to the downside. So this will be determined when it can break before, of course, but this would be the last kind of decisive time frame where this price should take a move. So in order to have an approximation as well, measurement of how the price would be moving, this would be the technical formation or the technical target of, if the price broke to the downside, let's say from any certain point, I would take the measurement from the beginning of the shape or of this pattern and drag it down to wherever it broke, either to the downside or, for example, to the upside, like so. So if this, to confirm a breakout, retest, and then move up, the target would be around this area. Okay, might be fully met, might not, might push a bit higher, but again, nothing is 100% when we are doing our technical analysis. We're always relying on probabilities, and we're always trying to get that extra 1 to 5% to our favor. So if we go a little bit to the charts, and let's see the triangles and the broadening wedges. So the triangles, the symmetrical triangle, which is a descending lower highs, and higher lows. So we can see like it's squeezing, and the breakout we measure it by taking one. Symmetrical triangles have a 50-50%, and it depends if the price is coming from the downside. Then if it's coming from the downside into a symmetrical triangle, the probability of it breaking is higher to the upside, usually, because this would be an uptrend and a trend continuation. So the price was down and it's moving and then going even higher. Again, the ascending triangle, if the price is, again, if it's an ascending triangle and the price is coming from the downside, from a lower price, then it has a higher probability of, again, breaking to the upside. But again, this is not a 100%, but yeah, the 5% plus helps. If we have a descending triangle is the price is always forming lower highs as it comes from a higher price action, and our support is at a certain price. So it's a continuation of a downtrend, and has a higher probability of breaking to the downside. So this would be the symmetrical triangles. Ascending, descending, and symmetrical. Those triangles are very important. Again, as I said, we always tend to look for them, and what helps us define them is the basic that we discussed yesterday: how to plot supports and resistances by accumulating candles, the biggest amount of candles at a certain time frame. On the other hand, we have the broadening wedges. The broadening wedges, technically they're kind of a triangular formation, but usually they come like from a closer distance and spread all the way higher, or a bigger as we move forward. So broadening wedges have a tendency, again, if the price is coming from the downside and this broadening wedge is forming, I can spot it starting from this point or this point, because now I can connect 1, 2, 3 and expand the lines, and to the upside I can connect 1, 2, 3, expand the lines. So this can be spotted right from here, the formation. And if the price is coming from the downside, we have a higher probability, because it's an ascending broadening wedge, to break to the upside. Again, this is called a descending broadening wedge, a reversal. So the price was coming from the upside, okay, we create a bottom, okay, here, and the price did reverse. This is a reversal pattern, like taking a trade, right? Notice where we took the trade here, broke to the upside, a retest, and then we open a long position. Those would be the most powerful trades that anyone can do, or the best buying positions that anyone can snipe, because usually this would be a reversal, and the reversal technically gives us an edge, because it would be we are opening a position against the market. The majority would be like, yeah, trend continuation here and kind of shorting or selling. So this would be a continuation pattern where we're coming from the upside, broadening wedge, and then we break it to the downside. Again, we wait for the confirmation. If you notice, break to the downside, reconfirm, rejected, and then going lower. So this is a trend continuation. And you can see, you can screenshot this and examine all the patterns, not to make this video any bigger or any longer. I'm gonna show you on charts how to kind of check for broadening wedges. For example, this is a ascending broadening wedge. This is on the Shiba Inu chart. So this is what I would want to see. So it's okay to just trade let me first of all just elongate this a little bit to give an example here. So we can go all the way higher, and yeah, so it's all good as long as, if I'm focused on this broadening wedge, it's all good to have the price just move along all the way. I will wait either to break downside retest, scenario 1, or I would want to wait for the price to break to the upside, retest. Those are the areas where I would open any position, buy or sell. Okay, so this would be a broadening wedge example, and this is our Bitcoin chart again. So how am I gonna let's say apply everything? So let's say here, first of all, let's take the trend line, have our trend. Now this is my support from the local lows. This is a support. Now I can spot it because I have a trend line, right? So I'm not allowed to break this, or else I will be changing the momentum. So now I'm in an ascending channel. Okay, so to add something to it, let's do something fun. Let's combine the trend line from our local low here. Let's go all the way up here. Okay, so this would be, notice I will pinpoint it out. So now I projected an ascending channel. Notice, why did I take this trajectory? I took the bottom of the candle, 1 2 candles here, respected here, see, respected here, and then look at the middle here, the accumulation. Look at the top here, the accumulation, middle. And then definitely you will have some fake outs to the downside, to the upside. It's all fine. I want the trend line which is respected by the most. So this would be one, and the other one would be, if I want to take another trend line like so, parallel channel, and project it to the downside. Now I have two trend lines. So this is how Bitcoin is moving. How to trade this? Now I will need to wait and see what would Bitcoin do right here. So this is like, it's supported at the middle, if you notice now, like here. Let's do this. Yeah, see, notice it's supported by the middle line, which is respected here. So I'm gonna wait. I'm expecting either rejection at this point and go a bit lower. So one option would be as open a short position on this. Okay, if I'm not taking into consideration anything else, I'm just trading this segment, this exact segment. So it's either, my options is opening a short around here and expecting to take long profits here, or I wait for the breakout, retest, and open a long position if I'm planning to long. So this would be the only place where I would open a long position, not here. I wouldn't want to open any long positions or buy before a resistance which have proven itself that that was a good resistance so far. So, and please note that this is a general rule as well. The more the price hits a target, the more this target becomes weaker along the way, or along time. So if you notice here, like the price hits 1 2 3 4 5 on the fifth time, the support tends to fail. So it depends, there's no particular counting for it, but sometimes it supports us and then pushes back. But the more we hit a certain target, the better chances we have of breaking it either to the upside or to the downside. So technically we need to practice the triangles, spotting them, channels, everything, everything in the charts, everything in our charts is based on spotting the channels, identifying how and in what channels is Bitcoin trading. And once I understand and I identify the channels, I can now set my strategy accordingly. So the more you practice, the end target is to reach something like so. See, this is one of my charts where I'm monitoring at the moment the price, and we have a combination of supports and resistances, monthly, weekly, daily. We have an ascending wedge in orange. We have a parallel channel here. I have all my markings, and I'm gonna add a couple now. So just for the meme, let's add a couple here. Here we have it once, and another one here. So that's how you kind of keep track. And we have here a support as well. See, this upside, this ascending support is doing really good, is supporting us. So I kind of trust this support. But see, we got rejected here. We got rejected around the red line. All right, we got rejected on the blue line. So the red line is showing a little bit of a resistance, and the tough resistance. We're getting sell-offs every time we touch it. What do you notice? The more we stay in this trend, the closer we are to either then make a decision, either break it to the upside or break it to the downside. So we have to wait and know what targets are we looking for before the market makes a decision, because when the market does make a decision, I want to be ready. And that's how I would strategize for whatever actions I want to take in the market. Thank you for tuning in. This would be the second episode. This is not over yet. Tomorrow we'll talk about something new again, but if you combine all 3 or 4 episodes, we'll see how long this will take. Then you'll have a better perspective of how to start from scratch up into setting up a decent chart to strategize and have a decent technical analysis. Thank you for tuning in. Have a safe night, safe trades, and have a blessed night and weekend. See you tomorrow.